whole life insurance, it gives you flexibility, and that flexibility can give, with whole life insurance, can add a lot of flexibility into the other strategies that you have in retirement. We talk a lot about the fact that whole life insurance is the ultimate and asset. It's not an either or kind of situation. Now, as we're talking about that during our accumulation years, we're talking about that from the fact that you use it as a savings and an opportunity fund, but then you can leverage it to invest in other high risk stuff. In retirement, it just gives flexibility in how you utilize the other assets that you have in your life. Hey, what's going on, cash flow hackers? It's Chris with Life 180. And for this video, I want to talk to you about the benefits of owning whole life insurance during retirement. Now, I get asked all the time, how much sense does it make for me to have life insurance in retirement? Maybe I need it, maybe I don't. But for this video, we're going to go through 10 reasons I think you should have it. All right, so reason number one is the freedom to spend other assets in retirement. One of the biggest things that I think is really important to understand is I know a lot of people have a desire for a legacy, right? I have 3 kids. I don't know where my life is going to be in 40 or 50 years when I get closer to the end. Hopefully it's that long at least, if not longer. And I don't know where I'll be, but I do know that I believe it's my responsibility to leave this world better than what I inherited, right? And so my goal with my kids is not to just leave them a bunch of money, but to teach them how to be better financial stewards, to teach them how to leverage the assets that we accumulate and be able to pass it to the next generation and to do more, to be able to create a better impact. And so by having whole life insurance and knowing that you have this guaranteed legacy plan in, kind of on the back shelf of the rest of your retirement assets, it allows you to more freely spend the rest of your assets, in the sense that, like, if you spend all your money, you still have a legacy on the back end of it. I know there are a lot of people out there that will tell you that life insurance just makes no sense if you don't need it. I would argue that those people are not really looking at it from like a biblical perspective, if you will, and thinking about our responsibility for the next generation to leave that legacy. Now, I'm not saying just do it irresponsibly and just give them tons of money because that will create all sorts of problems as well. We have to teach them to be financial stewards, but then give them the resources to do the best they can with that after the fact. So the second reason that I think whole life insurance is good during retirement is because of the fact that it can actually be utilized to increase your Social Security benefit. Now, this one confuses a lot of people, and here's what I'll say to it. When you first get into retirement, I think a lot of people understand the longer you delay taking your Social Security benefit, the higher that benefit's going to be, right? So you have all your other planning and retirement planning and retirement assets that you have set aside. But if you have enough money into a whole life policy that you can draw down along with the assets that you have for your traditional retirement planning and your 401ks and Roth IRAs and all that stuff. And I have a lot of opinions on why those aren't necessarily the best accounts to have your money in. But the reality is there's $27 trillion inside a qualified account. So I'm just going to go based on the assumption that you have some money there. So while you're looking at the best way to leverage all of your assets and thinking about how do I maximize my Social Security returns, saving and keeping money in a whole life policy and being able to draw that money down during the early part or the early years of retirement can be a great way for you to be able to guarantee the growth and the cash flow that you're going to get by delaying taking the benefit for your Social Security. So the third reason I think whole life insurance is a great asset to have in retirement is to simply have what I call a volatility buffer. Now, if you've ever heard of the term sequence of returns, you understand the concept that it's not about what your rate of return is, it's a matter of the order in which those rate of the return happens, right? So for instance, if you retired with $1 million in your account and you expected that $1 million to be able to last you the rest of your years in retirement, that's all a matter of how you need to take the money out of that account and how that account performs, right? So for instance, let's say you retire at 65 and then when you're 66, we happen to have a 2008 type scenario and you lose 40% of the value in your account. The problem is now you're retired and you need to keep drawing down that account where you could live comfortably, potentially, or at least hypothetically in this scenario, on $1 million and just living off the interest of that. Now what's going to happen is if you lose that money and you're down to say $600,000 and you still need to liquidate it or take the same amount of distribution from those accounts, now you're having to take a higher percentage of your portfolio value and you never allow it to catch up because you're liquidating negatively performing assets, and that creates a compounded problem. By having whole life insurance, you have an account that is guaranteed, it's liquid, it's accessible, it's tax-free if you do it the right way. And what's going to happen is when you have, which it's inevitable, by the way, it doesn't matter if it's year 1, 2, 5, 10, 20, whatever during retirement, you're bound to have negative years. So if you have an account that's set aside as a volatility buffer, i.e. a whole life policy that's guaranteed to be there, you can liquidate that account on years that it makes sense. So you're not liquidating negatively performing assets. And if you're not having to liquidate negatively performing assets, what's going to happen is we all know that the market's going to bounce back. And when you allow it to bounce back, you're going to do nothing but win. And it's going to allow you to get to ultimately leverage your retirement assets for income a lot more efficiently. So the fourth reason I think people should have whole life insurance in retirement is simply for asset allocation and diversification, right? So when we look at typically how people are invested, their asset diversification is not really as diversified as most people think. One of the things I always kind of am communicating to people is that the idea of diversification isn't what it used to be. We live in a global economy at this point in time, and there are so many stocks and investment funds. The correlated movement among all these different markets is so similar that the idea of being diversified is really kind of overplayed. So having whole life insurance, which, by the way, whole life insurance is kind of in an asset class all of its own, right? It really, truly is. Like, there's no other asset that will give you the guarantees, the liquidity, the use, the control of the money, the returns long term. Ultimately, what that does, I guess it gets me into number 5 on the list of why you need whole life insurance in retirement. And that is, it's an emergency account. It's a savings account. And once again, everybody, whether you're 25 or whether you're 85, we need to have money in an account that is our liquid, accessible capital in case of emergencies. And I would argue opportunity as well. But for this, let's just talk about emergency. And so if you're going to keep money that you know needs to be liquid, you can keep it either in a savings account, and that's going to be earning 0.1%, at least in this interest rate environment right now, or I could have money in a whole life policy that I know long-term is going to earn me better than 4%, right? And so that's going to be a fairly good hedge against long-term inflation. I'm not going to lose purchasing power of my money that I'm just kind of keeping in a safe, liquid, long-term savings account. And I know that I can tap into it whenever I need it, whether it's for medical bills in retirement, whether it's for emergencies on our house or car or anything of that nature, or whether I need to help a family member, whatever it is, I have that money there for whatever I want it to be for. So the sixth reason you want whole life insurance is simply the fact that there are no required minimum distributions. Don't forget, you're paying for your whole life policy and you're saving inside of this whole life policy with after-tax dollars. So therefore, it's going to grow tax-free. You're going to be able to get tax-free access to the money if you do it the right way. And when you look at it from that lens, you realize the fact that it gives you a lot of flexibility in retirement. Don't forget, with other accounts like IRAs, qualified accounts, stuff of that nature, you have to take required minimum distributions when you come of age, right? So it's really, really important to understand that with whole life insurance, it gives you flexibility, and that flexibility can give, with whole life insurance, can add a lot of flexibility into the other strategies that you have in retirement. We talk a lot about the fact that whole life insurance is the ultimate and asset. It's not an either or kind of situation. Now, as we're talking about that during our accumulation years, we're talking about that from the fact that you use it as a savings and an opportunity fund, but then you can leverage it to invest in other high-risk stuff. In retirement, it just gives flexibility in how you utilize the other assets that you have in your life. So reason number 7 that you want whole life insurance in retirement is because let's face it, life happens. And the living benefits of whole life insurance are like no other product in the world, in the financial industry. Index Universal Life has living benefits, but the downside of the risks of Index Universal Life to me just aren't worth it. And it's one of the reasons I love the guarantees behind whole life. I love the fact that it's a financial fortress for you to be able to bank on and rely on for making sure that what you want to happen will happen when you want it to happen, whether you're here to see it or not, right? But let's face it, if life happens to us and you become sick, you get diabetes, you become critically, chronically, or terminally ill, you're going to have access to a portion of your death benefit while you're alive. Like this is a topic that touches home for me personally. I've had family members, my father-in-law with pancreatic cancer, being able to access death benefit while you're alive for alternative medical treatments, to be able to run your medical directive in the way that you want. I've had a client that one time had cancer and knew she was going to die literally within 5 months, and there was nothing they could do, and she didn't really want to fight it and go the natural treatment route. But what she decided to do is get access to her death benefit and take a trip to Australia with her family, literally her whole family of like 15 people, and she went for like a month and a half, right? And that was important to her for the rest of her life. And so having access to those living benefits gives you flexibility and control in so many different ways. And let's just face it, life does happen. We don't know what the future holds. We don't know how our health is going to hold up. And so it's nice to know that having this for our legacy and having it for our own medical directives during our life, it's extremely powerful, and it's extremely flexible. And that flexibility, once again, you're going to hear me say that a lot. The flexibility of your financial strategy in retirement is going to be really important to your success and your lifestyle. So reason number 8, life insurance, whole life insurance is a great asset to have in retirement, is because it's a great supplement for college planning. Now, I know that may sound weird to a lot of you, but in all the years that I've been doing this, I can tell you more grandparents I know that pay or help contribute to their grandkids' college tuition than you would probably think. And so from that perspective, one of the challenges is like, where do you save the money? Well, by saving money in a 529 account, which is traditional college savings plan in the United States, by saving money in that 529 account, really what you're doing is you're effectively driving up the actual cost of college. Now, I did a webinar, I think 5 years ago now, on saving on college, not for college. And the whole idea about that webinar is the concept that, there's a sticker price for universities in the country, and then there's the actual what people pay. And the sticker price might be $60,000, but the actual amount that you would pay if you handle it right might be $40,000 or $30,000. And the bottom line is, the more money you have in a 529 account, the more you're going to be required, the higher that sticker price, the higher that actual payment you're going to have to pay is for that college tuition, right? So by having money in a whole life policy that can be used to supplement, plus, let's face it, if you're a grandparent paying for your college tuition for your grandkids, having that death benefit to be a windfall of cash to help cover that, if that's something that's important to you, that can cover it, right? And if you decide to use the capital inside of the policy or policy loans for that, then you can utilize that, and those are just going to be leveraged against the death benefit. You don't ever have to pay them back. It'll be handled when the payment of the life insurance is paid out. The college payments will be deducted from that death benefit. And when you use the life insurance cash value or loans against the life insurance cash value, what you're going to be doing is not utilizing an account that the FAFSA report is going to consider as qualified income to increase your expected family contribution. So it's going to be nothing but a win-win-win all the way around when it comes to planning for college for your kids or grandkids. So the next benefit, the 9th benefit of why you want whole life insurance during retirement, really has to do with before retirement and why you would want this. Now, I get a lot of questions from people about, oh my gosh, if this whole life insurance stuff is so amazing, how come I haven't heard of it? Well, the reality is, most of the people that do this, I use this statement a lot, and I think people misunderstand it a lot. The wealthiest people in the world utilize whole life insurance in the way that we're talking about. And why is that? It's because they're looking for alternatives, right? Like, if you think about 401ks and IRAs, Roth IRAs, there are contribution limits to all that. So the higher net worth people of the world don't leverage those traditional assets that most people are using. And so what they're doing is they're finding products, i.e. whole life insurance, that have no contribution limits, right? You can put potentially as much as you can qualify for in these policies. Don't forget, the government knows how amazing these are. There are tax limitations to the benefits of these policies. So it's called a modified endowment contract. The government has an algorithm based on your age, your underwriting level, the premium amounts, the death benefit level, and how much cash value can go into these policies or be accumulated in these policies and still maintain having tax benefits. If you go above that limit, it becomes what we call a modified endowment contract. And what happened is in the 80s, the government actually instituted this rule that makes it so, because people were jamming more money into these things, and the government's like, whoa, nobody's ever going to contribute to a 401k or a qualified plan if they could just put all this money into these whole life policies to the level that we are. So they limited it. But here's what I know. Anything the government's going to limit my ability to do, I'm going to maximize that like to the brim, right? I'm just going to fill it up as much as I can to that point. And what I can say is from that perspective, having an account that has no contribution limits is an amazing thing. So for the higher net worth people, if you don't qualify to participate in a Roth IRA, or honestly, I'm not a big fan of 401ks, even if you can contribute to a 401k, I'm just not a believer in it. You do you, that's your thing. I would never put my money into an account that I can't control and that I'm in partnership with the government, which is the worst money management organization in the history of the face of the earth, right? Like, so that's just not going to be something I'm going to do. So having an account for high net worth people with high contribution limits is extremely important. So the number 10 is a little bit different, and it's kind of continuing down the path of the last one, that is saying there's no early penalty for accessing your money before 59 and a half. So if we're talking about money for retirement, we also have to be thinking about, you're not going to just have all this money and dump it in at one time. You're going to have to save for this long term, probably starting in your 30s, 40s, and 50s before you get there. So there's a chance that life happens once again, and that you're going to need to access your capital along the way. By having your money in a 401k, you have to realize whatever your account balance is, that money's not all yours. You have to pay taxes and penalty to be able to access that money. Inside of a whole life insurance policy, there are no penalties and there are no taxes to be able to access your money before you're 59 and a half. And having access to that money for emergency and for opportunity can be one of the greatest benefits that really fuels your financial success, because I say it all the time. You need to have an emergency fund to protect you, to not have to make bad decisions and make bad economic environments worse. And you need to have an opportunity fund that actually makes it so you're not worried about bad economic environments. You're actually seeking them because you're going to be opportunistic. You're going to be positioned to be an opportunistic investor. And by having money as you're saving for retirement, for all the things I've talked about up to this point in time, by having money in these accounts during your accumulation years, this account can operate as a savings and opportunity fund, and it can actually catapult your wealth further ahead and help you reach your financial goals on a more predictable basis. So anyway, that is the 10 reasons I think you should have whole life insurance as part of your retirement strategy. And that's it. So if you found value in this, please make sure you hit that subscribe button, click the bell, that way you get notified every time I launch a new video. If you have any questions, any comments, any concerns, anything about anything I just talked about, comment in the comment section below. I'll do my best to engage with you. Until next video, have a blessed, inspirational day, and we'll talk soon. See ya.